And welcome everybody to another episode of Smart Money Circle. With me today is Rob LoCascio, CEO and founder of LivePerson, which is a very interesting tech company that helps companies, talk with their clients with an AI overlap. But I'll let Rob explain that much better. Rob, thank you so much for being here.
Thanks for having me on.
So Rob, I always like to begin. Can you tell us a little about your background and how you became CEO? I know you've been in the business since the 90s, so I'd love to hear all about it.
Yeah, so I started LivePerson in 1995 and started like most people at that time building websites. And then I realized while building e-commerce sites, this is way at the beginning, is that a big part that I felt was missing was the ability to ask questions from somebody in the company. And simple concept. At that time, you had to send in an email or you'd have to make a phone call, and it was dial-up connection. So you have to hang up your connection to the internet. So I invented web chat for customer care, and that was in 1997, 98. Mm-hmm. And then, with really the vision that I wanted to humanize the digital space, humanize digital commerce. And that thread is sort of carried through all the way to where we are today, which is, conversations power, I think, greater commerce. We see it. People need to ask questions. They want personalization. And the best way to do that is through conversational experiences. And what happened was about 7-8 years ago, we could see we have all this data from our customers of conversations around, talking about paying your bill at a telco and getting a credit card and buying something online. And we saw that data is really, really rich, and we could basically create, ways in which you can automate those conversations at very, very high quality and high scale. And that's really what the focus was. And we launched our platform called the Conversational Cloud about 4.5 years ago to bring AI and conversational AI to the masses, to, we have about 10,000 customers. And that's really what our focus is today. So we're about 1,700 people total, $500 million in revenues and growing we grew about 27%. And so there's a lot of demand in the market for what we're doing, and it's quite exciting. And we're bringing it to other areas like healthcare and Web3. And we've got a pretty big vision of how conversational AI can really impact people's lives for the better, as well as the brands that we serve.
Interesting. So let me ask you, let's go back to the 90s and then early 2000s. I remember those days very well. And let's talk to me a little about how you navigated the .com crash and what that was like from a day-to-day standpoint. And did it impact your business, or how did it impact your business rather, and so on and so forth?
Yeah, I mean, for all of us, starting we went public April 7th of 2000. Mm-hmm. And we were one of the last internet IPOs. In the week we went public, I think there were 25 of us going public and only like 7 of us went live. And so we knew that it was kind of over. And by 2001, we started to restructure the company, and we let go about 80% of the workforce. We were about 180 people, we went down to 40. Mm-hmm. And we did a bunch of other stuff. And we really worked together as a group. It really showed what people can do if they're focused and they're committed and they want to make it work. It was survival mode back then. And it was interesting because the Web 1 version of the internet, and that's what I was part of, most people didn't survive it. Most companies, my peers, got wiped out. And I just took a different approach, which was kind of dealing with reality. And, even though it was easy to raise money like it is now, I kind of realized it was all going to end, and we needed to just get serious about being profitable and growing the company and stuff like that. And that's really what we did.
I love that. One of the biggest tests of leadership, as you know, being one of the longest standing CEOs going on for 3 decades almost and going strong, is the ability to, navigate adversity and or deal with the changes in the marketplace, for lack of a better word of explaining it. So learning from those kind of situations to me is really priceless, because anyone, when things are going well and people throw money at you, can survive. They say everyone's a genius in a bull market, right? But in a bear market, or when things get tough, that's when the leaders really shine. So that was fantastic. So let's talk about Web 1, Web 2, and Web 3, if you don't mind. Please educate the audience a little bit from your point of view, what is Web 1? What was Web 1? What is Web 2? And then what is Web 3 going to be?
Yeah, and so Web 1 is really, I look at it from two dimensions. One is the technology dimension and one is the business model dimension. So Web 1 was really about HTML and being able to organize the world's information into digital and using HTML user experience to do that, and websites and browsers. The Web 2 was about apps and social. And the continued thread in Web 2 is the advertising model. So, the internet was founded up, predicated on this model that data, like consumer clicks, have value.
Right.
And like eyeballs on a TV or listening to a radio, if we go back to the pre-internet, and that it's more effective and efficient in tracking people versus if they're watching a TV program like Nielsen, and this is like, I can see, and the advertisers like, wow, they're clicking, and that's great.
Yeah.
And then the next part, well, who owns the data? And obviously companies started to form around, like Google and Facebook, around we own the data and we're going to give it for free and we're going to get people to click and then we're going to put ads in front of them. We all maybe may or may not know that. So we made a trade as consumers that our data isn't really that important to us, that it's okay for someone to make money off it as long as we get services like free services like search and social. The Web3 is really about, and I'll start in I'll also talk about Web2, which is about centralization and clouds.
Right.
So it's about cloud technology and about the centralization of power. So today there are very few companies, Amazon, Apple, Google and Facebook, that really control, our lives, and it's centralized power.
Right.
And they use cloud technology, which is also centralized power. Like, show up to me, I'm going to own you. I'm owning your data.
Right.
I'm going to disintermediate like a bunch of people from your data, and I'm going to make money from that. I'm going to be the middleman. I'm the broker in between you and an advertiser, in between you and a merchant. If you're a merchant on Amazon. And what Web3 started as was a reaction to centralization of power. And that started with Bitcoin. And that started during the financial crisis. And that started with the concept that banks, which are centralized powers, maybe don't do good. And so when you look at Web3, it's all about a community of people came together. They don't work in an office. Right. They're independent, but they work in unison through technology to create ways in which we can do things like digital payments, and there's a bunch of stuff going on in Web3 today. But the real goal is to allow people to own their data. And blockchain is about the data is exposed, it's open. I have a wallet that's connected to my data, but no one owns the data. You own it as a consumer, as a user. That's the big difference.
Interesting. So what about the metaverse and how does that come into play?
The meta, I mean, it's interesting because Facebook obviously termed it Meta like a couple months ago, and they changed their company to, and they got their first taste of that. They see all centralized Web 2 companies, Web 1 companies the Web 3 is a threat. Right. Because it's decentralized. As a matter of fact, many of the companies that are doing amazingly well on Web3 and blockchain and crypto, they're nonprofits in the core. Right. There is no company to acquire. So they can't even acquire. Normally they would acquire in the future and buy companies for billions of dollars. Right. They can't do it. So what Facebook saw is two threats. One is they tried to create their own like a currency in Libra. Yeah. And that just recently has been shut down, or they sold that asset because the people in crypto rejected it. Yep. They were trying to centralize power around payments. And the second thing is they think they're going to centralize power around, creating this metaverse, which is I live in an alternative digital community, and they want to be there because they see that as a huge threat to their core business. Right. And so, but there are many communities now, decentral land. There are a bunch of communities already built on blockchain that are decentralized, and they want to come in and try to centralize and grab power. And they're gonna have a, unfortunately, this doesn't work that way. But Meta is that role. I mean, we're living in Meta right now. by living like this in what we're doing with Zoom.
I was going to ask you. So what about Sim City or Sim Life or Second Life or Roblox? All these kind of just video games in general. Isn't that considered meta as well, or is that centralized because Roblox owns Roblox or Microsoft owns Xbox or so on and so forth?
Right. You got to really look at like decentralized. There should be no company.
Okay.
I think when you look at like what's true Web3,
Yeah.
you don't no company.
Yeah.
It's a protocol. But you can't find the people behind it. There's no CEO. I mean, you think about Bitcoin. What's amazing about Bitcoin is like, there's no CEO. We don't know who the founder is really. There's no CMO, but yes, there's no ad budget, but yet it's one of the biggest brands in the world right now. And it's over $1 trillion in value, almost 2 trillion in value in market cap. It's almost as big as big tech without a CEO.
Right.
So when you look at the meta, when you look at things that are out there, you have to look at the same thing. There should be no one behind it. It should be just faceless and nameless people putting it together in service of us, in service of the community.
So with live person, Rob, just to come back there. So that works, that concept of connecting people to people with AI specifically, that works in my understanding of it in Web3 as well. Is that correct?
Yeah. So what I've really come to realize, so the interesting thing about Web3 is that I see a different way, which is that the community is what powers it. Right. And so what's happening is when people set up a DeFi protocol or anything, like they set up a dApp, a website with something, an application on it, it's Web 2, it's an HTML interface, but at the same time, they're setting up messaging groups in Discord, in Telegram, on Twitter.
Right.
So there's this whole world of community and connection and conversation here, but the actual place that you're doing the actual buying and selling of things is on a website.
Right.
So what we're building and what we're focused on is that I believe messaging and the messaging communication should be combined with the commerce, and that's what I believe in general. But for Web3, it just fits like a glove on a hand. Yes. So we are working on a Web3 offering that brings the capabilities of commerce and communication and community together, and that's really what we're doing.
And would you allow decentralized people to communicate with each other as well, where there's no central customer service, if you will, but there's the people have to communicate, they have to message each other. So to me, it's a no-brainer. Right.
And what's interesting is we're working on something with one of the big Web3 companies on a decentralized customer care, a DAO, a decentralized organization that people come in as experts, they get certified and they're answering questions and they'll get tokens for doing it. Yeah. Because the same thing is we're working with MetaMask and Coinbase. They're our customers, our two biggest customers in Web3 that we provide our technology to. But the interesting thing is like behind that is very traditional thinking of contact centers, like they're hiring a bunch of people. Right. And we're doing, so we said, first of all, do messaging and AI. You should not have big contact centers. Right. Like, why would we go down that route, which we know is broken in the real world? Right. And so we're really starting to do things because AI plays into that, messaging plays into that, but I think there's a broader idea about this decentralized customer care offering, and that's also exciting.
So our audience is predominantly investors, institutional investors, individual investors. It's the investors is the lane. So what is the pitch for investors, if you will, for lack of a better word? I don't like the word pitch, but the value proposition or some of the competitive advantages that you share with your company and then going forward?
Yeah, so it starts with our history, as I said, and the next layer above that is our data set. So we'll generate this month close to 1 billion conversations on our platform. Why data is in the digital world, your moat, your gold. Yeah. And we have a very unique data set in the world, and that's these end-to-end conversations in business environments across 10,000 brands from around the world. That gives us the power to create automation. And that's what is AI in the end? AI is really there to help scale things in our life that normally would need a human to do it. We all know that's, so in our world, in the contact center, there's a bunch of people you have to get to and they're contact center reps, and that's a bottleneck.
Right.
And that's expensive.
Yeah.
And like our largest customers, they may have 40 or 50,000 people answering phone calls.
Yeah.
And that's expensive. So if we can then take that data set, replicate very good conversations, because we have the platform to do that,
Mhm.
and then we're able to scale conversations. Think about the world we're going to live in. Alexa gives us a preview of the world, but not a very good preview.
Right.
But everything in our world is going to become very conversational. It's the most natural way for us to process and get data. Like turn on the lights, do this. I want to see this. Check out this. My health. I can. That's all conversational. But so we are we are the leading provider of conversational AI in the world, and now we provide it to customer care. We're looking at things like Web3. We're actually very focused on healthcare, because it's another bottleneck, getting to your insurance broker, your insurance agent, getting to a doctor. These are just bottlenecks of conversations you need to have. So I think as investors, they have to see, like, we're a very unique company. AI is very big. We provide this very specific one for conversational AI. And now the bet is, well, where does that show up? Where does conversational AI show up? In my car, in my brand, so they have to work through, like, what's the TAM in the end, which is, we've looked at, just in customer care alone, is about a $2.3 trillion of money that's being spent right now around all the things. It's 9 to 12 billion alone in just phone calls. But if you look at website traffic that can be converted to conversational commerce, there's a lot in there. But just the context of our loans, about 9 to 12 billion dollars. That's how we look at that alone.
Tam, can you explain that to the audience in case they're not familiar?
Yeah, it's the size of what's the size of the total addressable market that we can go after. So we're going after a very big market, and we're executing on it well, and we're unique in the world because we took a lead. We took a very big bet 6 years ago to build a whole new platform, and like we pivoted from chat to messaging to AI. So we made the big bets. We've got about $800 million right now that's gone into the platform. So we have a very big leadership lead right now when it comes to that.
Love it. So a question I have, I get this question a lot from investors and clients and so on and so forth, to CEOs of publicly traded companies. How do you differentiate between the company and the stock, and between companies doing well, but the stock's not? Jeff Bezos was famous about this back in 2001 when his company was growing so much, but the stock was under so much pressure. How do you internalize that and deal with that disconnect sometimes, where the market, for whatever reason, nothing to do with you guys, is just down, and it'll turn around? It always does, but that type of a thing.
Yeah, I mean, look, I've been through, because I'm 22 years running a public company, and our low was during the .com, which we went out at $8 a share in 2000, April 2000. We went down to 7 cents a share in 2001, which was a $2 million market cap. We had 7 million in cash in the bank, and that's where, and yet we were $2 million market cap. So we had a negative $5 million, enterprise value, which is crazy.
Yeah.
But the world, they were viewing us that the world was going under,
right,
and we would probably go bankrupt, and they just put us in that category. There were a couple of really smart investors. There was one in particular who came in and bought 20% of the company around November of 2001, because we flipped the company to, like, we had negative gross margins, then we got positive gross margins. We got to break even, and he was watching it.
Yeah.
And he got 20% of the company for like 200 grand.
Oh God.
400 grand. About 400 grand, 20% of a company, which he later sold for like tens of millions of dollars. Like he held up. And I laughed at. So I think what happens is that people try to, they don't look at the fundamentals of the business. They just look at the fundamentals of the market, and they say, well, the market's down and you're down, and therefore there's something wrong with you.
Right.
And I often say the stock has no memory.
Mm-hmm.
Like, no one remembers 7 cents a share. When we were going through our change from a chat company to an AI company, it was like 3 years of hell as a public company. They just were saying there's a lot of negativity around us because people didn't understand what we were doing. But some people picked up, really dug in, and realized, oh, this company, if they can make it, they're going to be great.
Yeah.
So, and we ended up at $60 a share. Now we're down 50%, down to $30 a share or whatever in the last couple of months, because the market's going down. And so I personally, I'm still like one of the largest shareholders. Mm-hmm. And I just look at it like the fundamentals of the business. It's not always perfect. even running a business at this size, it's not always a perfect in execution. You try to do your best.
Yeah.
But what is the company fundamentally focused on? What's their market? What's their vision?
Yeah.
And what's their track record?
Right.
And that kind of, then the rest washes out, and you can make bets to make. And this is where I made a lot of my money on my stock, because when irrational behavior happened in the market, I would step in and buy stock, or I have stock options that were issued during this time.
Yeah.
And that's where I made most of my wealth. I still have my core stock, but I have a lot of wealth in just, I bought some shares at times where I'm like, this is ridiculous.
Yeah.
And so I just think you should not, you got to look beyond the markets, you know.
The time frame is really important. I just published a new book. It's called Psychological Analysis. It's #1 on Amazon. And the idea is, in addition to fundamental and technical analysis, there's something else, right? So the whole point of the book is emotions trump logic in the market, because people are emotional creatures and they make emotional decisions. So the idea is to flip it and make rational, not emotional decisions, especially with your money. So what you're saying is spot on. Thank you for that answer.
Like, it's like Bitcoin. I mean, I about a year and a half ago, I started to put real money into crypto. Not because I don't believe in gambling. Like, I'm not a gambler trader, you know, like people trade for gambling. I'm talking about that, which is short term. I'm going to win. And I just don't have the time because I'm running a company.
Right.
What I started to do is meet with the CEOs or the founders. There's 9, like some of them, the 9 CEOs, they just created something.
Yep.
I started to meet with them and said, what's going on here? What's
Right.
the vision of what you're doing? What's the underlying technology stack? Like, and then I could see, wow, there's a high probability that Web3 will replace Web2 technologies. And I can get in early by buying a token,
Right.
you know, of a DeFi project, of a company. And I'm getting in without being in venture capital. I just buy the token, it's traded. And like, so for what it's democratizing venture capital.
It is.
And I think it's amazing. So I think you got to look there. And if you wait 5 years from now, you're going to create a tremendous amount of wealth for yourself by being in that market.
So do you see the internet boom back in the 90s and now the crypto boom happening now? Are we in similar parallels where the early stages of just massive disruption or life-changing, like fast forward 10, 20, 30, 50 years, everyone's going to be decentralized, crypto, so on and so forth, it has massive runway?
It does, you know, and that's, I mean, what's really interesting is last year, $41 billion were spent on NFTs in the NFT world, in crypto. It took 10 years for e-commerce. It wasn't until 2004 that e-commerce was a $41 billion business. In 1 year, they did what took 10 years to do, because everything was built on transactions. In Web3, it's all about doing a quick transaction. You can fractionalize. I can do a $1 transaction. I can do a 1 million. I can move $50 million from one wallet to another in a matter of a click.
Instantly.
You can't, and just payments alone with e-commerce was painful at the beginning. Like Amazon created the one-click button. It was patented because it was like the most amazing thing. In one click, you pay, shipping. This world is very fluid. And often I like to say is what equivalent to the like in social is the transaction in crypto. People love to just transact, and you can do like 5-cent transactions. It's like you have your wallet, you did all, and so it's built on something that's very different. So how we're going to do finance, how we're going to do health, how we're going to do our relationships with our brands. It's going there. You know, it's going there.
Agreed, 100%. So on to some more business related questions. How do you handle risk?
It's a good question. I mean, you know, some risks, you have to take risks. Leadership is about exponentially growing your company. That's what leadership is. Management is you're managing systems. You don't manage people, you lead people.
Right.
No, you don't, so you have to be thinking exponential, and exponential thinking takes risk.
Okay.
So now there's risks. I don't, you know, during the .com, I learned something very fundamental about finance, and you have to keep your balance sheet and your P&L strong, because then it gives you the ability to invest in the future and get luck. So I learned back then, because I had negative gross margins, which means for every dollar that I sold, I spent actually back then $1.40 buying it.
Right.
I have a great story about that if you want to hear it.
Yeah.
But I learned, yeah. So I learned the fundamentals of business, like the fundamentals of finance. So what I'm trying to say is like, as long as you've got a strong P&L and a strong balance sheet,
Mhm.
you then have to think about what level of risk do you want to do. You never want to risk the balance sheet and the P&L.
Mhm.
So you take bets, but bets, because it's always a windy road, that you can handle the windy road.
So in other words, you don't want to have a risk of ruin where you're completely wiped out. Never do that. And then when you take your bets, because the future by definition is unknown, no one knows if that idea is going to work or not work, you want to make sure you size those bets accordingly. It's a lot like investing or trading. So worst case scenario, if this bet doesn't work, I'm going to lose 1% of the portfolio or the balance sheet or whatever the case may be, or 2% or 5%. Do you have a magic number that you go for, or is it based on your conviction, or how do you size those bets?
It's really based on, it's based on the size of the opportunity, right? But I like to walk, I like to crawl in.
Mhm.
I don't like to run in.
Okay.
I'll crawl in with an idea, and you can put, 10 people on it and
Mhm.
walk, and then that could be 20 or 30. So we've got outside the core, we've got two big bets remaining. One is in healthcare and
Okay.
one is in Web3.
Mhm.
And each of those has, let's say 10 to 20 million dollar bets in them,
Mhm.
on a balance sheet where we have 600 million in cash. And so we are investing in these things, but where the core business remains strong and affords us the opportunity, because your destiny would, a lot of people don't realize, like, you're on a constant march to your destiny.
Right.
And so, like, I know, like, I didn't make it big, and like Facebook came out and they hit their destiny really quick, and that happens, like, that's a moonshot, and
Anomaly. Yeah. It's an anomaly. That doesn't happen every day. It's an
that's right.
outlier. Yeah.
That's an outlier. And for most of us, we have to meet our destiny. And what does meet our destiny means? We need time to meet our future. And
Right.
if you give yourself more time, like I did during the .com, I just gave us time
Mhm.
to meet our future. So, and if you want to hear a funny story, I'll tell you a funny story if you want to hear
Please. Yeah.
about that.
Yeah.
So I was funded back in the .com by a group called Highland Capital. Highland funded Yahoo and eToys and all the big, like, .comers. They were like at the center. So they had a conference with all their CEOs. And I remember this, it was back in 2000. It was about August of 2000. It was in Boston. And we were all pumped up because things were still pretty
Of course.
okay.
Yeah.
And I remember they had Toby Lank, who was the CEO of eToys, and he was like a god at the time. His market cap, he was selling toys online. The
Yeah.
market cap was like 30, 40 billion. I don't remember what it was, something huge. And he just raised like $500 million. It was a huge raise of money back then. That was a lot. And he was up on stage. He goes, "I'll tell you what I'm going to do. I'm going all in. I raised my 500 million. I'm spending it during the holiday season. I'm taking this company all the way." I remember it. And we were all like, "Oh my God, this guy's amazing." I even felt like, oh God, I just don't even have his thing.
Right.
Next speaker was the CEO of Barnes and Noble.
Oh, wow.
Highland funded Barnes and Noble. They spun off BarnesandNoble.com, Staples.com, and they had him speak. And they said, "What is your strategy?" And I remember he goes, "My strategy is to get people like Toby to spend the money during the holiday season."
That's
That's what
so
he said.
smart. I love that.
And so we were all, as CEOs, we're going, what does that mean? He goes,
Right.
I looked at his P&L,
Yeah.
and he's got negative gross margins. So for every dollar he makes, he spends about $1.80 getting it. So if he spends the $500 million, he'll be bankrupt by February. That's how I look at it.
Right.
And I remember I came out of the meeting, I called my CFO. I said, "What's our gross margins?" He said, negative 40%. I said, "Holy shit." I said, when do we make them positive?" He said, 3 years from now, the way we're going. It stuck with me. Toby sent the money. February, filed bankruptcy. eToys got sold. They sold their name for like the KB toys for like a couple $100,000 or $1 million. This is what this company ended up being. So I'm saying he did not protect the balance sheet. And today he could be amazing, one of the biggest toy companies.
Oh, 100%.
He could have been around, he
100%.
could have been around. So,
Right. Wow, that's an amazing story. So we talked about leadership briefly. What makes a great leader and what doesn't? Now, exponential thinking, can you expand a little bit more on that, or just speak on other qualities that makes a great leader?
the first quality is that leaders are usually, you're not followers.
Mhm.
It's a really fundamental thing. When I was a kid, my grandfather would say, "Are you a leader or a follower?" He
Love
asked
that.
me this all the time. You have to be willing to do things that don't please the crowd. And you're a leader, you're not a liker.
Mhm.
And so you want to lead people because they have to respect the fact that you're taking risks, that you're connecting the dots for them. You have to be a good communicator and connect the dots for them, because your whole job is to lead through change.
Right.
That leadership is about leading through constant change.
Right. I
And
love
where
it.
you lose people is if you don't connect the dots for them,
Right.
or they think you're not being realistic about what's going on. You lose touch with reality. So you can't
Right.
be like dreamy. So I think it's really about managing change, and then all the parts that is like taking everyone on the journey with you. It's like the Shackleton thing. We know,
Right.
Shackleton, the great explorer, put out that sign, which is, going on to the Antarctica, you live on a boat, you could probably not come back, looking for people who want to take the journey.
Right.
And, they did that, the whole story, they got stranded down in Antarctica, but no one died. He took
Right.
them all back alive, which was unique. So it's the fundamentals. Like, you took someone on this journey to God knows where. You didn't promise that they're going to be safe. They entrusted in you,
Right.
and then you were able to connect those dots to get them through the change, to get
Love
them
it.
to the vision.
Love that. So what about, besides not understanding the numbers and the balance sheet, what makes a bad leader in your opinion? Because you've seen a lot come and go, especially in your space, the tech space. So I'm curious there, what do you like when you see somebody leading a team in the organization or a leader outside a competitor, what are some of the red flags that just go up like, oh yeah, he's not gonna make it, or this gal's gonna sink, or whatever the case may be? Are there anything that just glaring just jumps out at you?
Yeah, I mean, I just feel like I'm a servant leader. Like,
Mhm.
I believe in servant leader,
Yep.
and you serve the company. Now, the company, which the word company comes from the Latin root corpus,
Right.
which means body.
Right.
In itself, the company, especially now, many years later, the company of live person stands above me and everyone else. We're in service of it. We're
Right.
here to shepherd it to its destiny. What you see is that bad leaders are selfish and self-centered. It's
Arrogant.
about what can they get at. They come to the, I've had this recently, like, they come to the organization, say, what can I get out of this place?
Right.
And then the next step is that they don't see the place. They
Mhm.
just see themselves and their past, and how they're going to impose their past into the body,
Mhm.
and they get rejected.
Yeah.
So the first thing I always tell people is, when you come into a business as a leader, you have to understand what got it there, what's the culture, and
Mhm.
what are you there to serve?
Yeah.
What are you serving for?
Right.
How are you serving? Not what can I get out of it? I can get more power here. I can get more knowledge here. Now it's about money. I get more money here because the stock's going to go up. And it's like, that's just not, that's you suck in the resources of the company.
Right.
First give, and then you will receive.
Yeah,
It's a
that's very
basic
powerful.
thing. Give and you will receive.
Yeah, very powerful. I always like to say it's binary, right? You either give attention or you take. Most people want to go in there and take, but it doesn't work like that. If you give, you get a lot more. That exponential part, right?
Yeah, and we've had, we've created a lot of wealth for individuals in this company over the years if they put in the effort, and they're here for a bunch of years. We are living in a world now where everyone has this choice, and because we're not working in offices, there's less of an emotional connection, and there's a lot of trading going on.
Mhm.
Like, well, I'm not getting what I want now, so I leave. And I feel like you're missing, like, people miss the bigger point, which is that the best thing you can do is struggle.
Yeah, it's
The
so
best thing
powerful.
you do is struggle through and learn, not thinking, if it's not easy, then this is important. Like, struggle through it and see what comes out the other side. It's called work ethic. And I think there's some of that lacking now, because what's happening is people are throwing money at people left and right. It's
Right.
crazy the amount of money people are throwing at people, and they're leaving. They leave because they're like, oh, I can make double the money, and why not? I'm like,
Yeah.
okay.
Got it. No, that's really, really powerful. So what is the best lesson you've learned about leadership, or something that you wish you would have known when you were getting started, or when you're in 20s or 30s, or earlier on, that you'd like to share?
So the one of the greatest lessons I ever learned was through a guy called Bob Matchlot. Bob was on my board when we went public,
Mhm.
and he was vice chairman of Seagram's and Morgan Stanley at one time. He was on the board of Disney.
Mhm.
Like, he's a real amazing human being. And I was fortunate enough, he was an investor in my company through a venture capital fund he joined.
Mhm.
And I remember in 2001, in the January board meeting, we put the restructuring plan to the board, and it talked about firing 80% of the population.
Right.
And I was 33 years old, and my CFO was 34, and we were very young. Obviously, we're public, and I never laid anybody off at that point in my life,
Oh, wow.
and neither
Wow.
did my CFO. We had never had that experience,
Right.
and now we're going to lay off 140 people in one shot.
Right.
And I remember the board looked at the plan and they go, "How could you do that? Like, what does everyone do?" You know, it's very, they said, well,
I
how could you,
understand. I'm on boards. I get it. I would have the same reaction.
right? When you have a reaction like, well, how could you survive with 40 when you got 180? Like that's, and I said, I don't know. And I have no idea. But
Yeah.
what we do know is if we don't go down to 40, we're definitely going to go out of business anyway. So like, it was binary, you know,
Right.
it's a binary choice. So Bob pulled me aside and my CFO aside after the board meeting, and he said, I'd like to give you some advice.
Mhm.
First of all, what you're going to experience is not easy. You're going to let fire. I've been through it. You know, he's been around a long time.
Right.
But he said, I'm going to give you one piece of advice. He said, just don't bullshit them.
Mhm.
He says,
Right.
what
Yeah.
your nature is to not tell them the truth because you want to make it feel good.
Right.
And you got it. What he said, you guys are too young. He goes, I don't know if you're going to make it. This plan is like ridiculous.
Right.
And if you don't, you're going to have long careers. You just don't want people remembering you for bullshitting them.
So
And
powerful.
and there was a very powerful moment. So when
Yes.
we sat and we told people this is what's happening, the people that were left asked us, like, what do you think is going to happen to us? And I said, I don't know. And if you have to make a choice to leave, I understand. But I'm just telling you, like, we're going to go all the way to keep this company alive. If it takes us going down to 2, we'll do it. But
Yeah.
right now, 40 people, I think we can make it with you. Then we talked to our shareholders at the time. Same thing. It was like, it looked like a fucking mess, you know, like, and we just told them, like, look, we're gonna go for it and try to make it, and we're gonna do our best. But I'm around because of it. I'm around because Bob taught me a lesson. People know the bullshit.
Yeah.
And too many leaders create like a smoke screen of stuff.
Yeah.
And eventually you'll lose your leadership. You'll lose your leadership at that time.
I love that. So that's a great lesson with leadership. What about best advice about life or work or anything that you'd like to share with the audience? Because you're a wealth of knowledge here, Robin. Really appreciate it.
I think if you're gonna be an entrepreneur or do anything in your life that it takes a little bit leading, you know, being outside the norm.
Mhm.
I think you got to believe in God.
Yeah.
And I don't, it's not a God that's in a church or a synagogue. I'm not saying that, but you really got to be able to pray.
Yeah.
And I've been through a lot, you know, it's just what I've been through a lot. And I've seen a lot of things happen in the company because there are times where I just got to give it up.
It's grace.
And going through not only did we hit the .com, we hit 9/11. We were in New York. Then we dealt with 9/11 right behind it. And I remember like that whole year, it was so surreal to me. But at one point I remember I gave it up.
Yeah.
Because I said, I don't understand it all, but I got to believe that someone's going to get this through it. And it just can't be me.
Right.
Something beyond, something that'll help us with a hand.
Yeah.
And if we just do the work, the hand will help us.
Mhm.
And so I think if you're going to take on big things in the world, you got to have some semblance that's not about you and just you. It's about a group of people, but then there's something above it that says, I'll take care of you.
I couldn't agree more. I love that. That is so powerful. So Rob, now that you've gone through that journey and you've survived, it reminds me of the song, I'm Still Standing. So you give back, you do philanthropy. Can you speak about that part a little bit? Other interests you have outside of work. I read a great Steve Jobs quote where he was on his deathbed and he said, you know, he worked his whole life and his whole life joy was work, and he made a bunch of money and people looked up to him, but at the end it didn't matter because he's leaving life and he had nothing to go with him, but instead focus on things that matter, the relationships and doing good, helping others, and all the qualities of life. Can you speak a little about that transition? I know you're involved with some great, you know, Feeding New York and some other really great things. Can you speak about that a little bit?
Yeah, and I'll tell you where it came from. When I started this company, my first company went under. I started a company out of college. I had it for 4 years and it went under. And then I started what would be Live Person, and I didn't have any money. And I had to sleep on a couch in a very tiny sublet office I had in New York with a guy who made t-shirts. And I didn't have money to have an apartment. So I slept on this couch, and then I got a health club membership because there was no shower in this building. And so this was how I started for the first 2 years. And mentally, I went through a lot. And I had a guy who I was working with, a psychologist at the time, to kind of get me, I get my brain in shape. And what he told me was, go to a homeless shelter and go volunteer once a month. So I'd go to the homeless shelter of a church on Park Avenue called St. Bart's, and I'd sleep over at night. I'd feed the people, and I would go back to my place. And I remember thinking, man, I'm so lucky. Like, I would hear the stories of people who didn't have a net, a safety. I had a mother and father who cared for me and loved for me. And I knew there was a safety net, worse if they really hit bottom. But I realized there's a lot of people that don't have that safety net.
Right.
And so what it taught me was, like, you can give even if you don't have anything, and because you have a lot.
Right.
And so from there, during the .com and all the stuff that happened in 2001 and 9/11, I wanted to give back, and I wanted to give turkeys during Thanksgiving. So a bunch of people in the company, we all got a U-Haul, bought a bunch of turkeys, went and we fed women who had been in tough situations in a shelter called Women in Need. And we fed them, and it was amazing showing up with the turkey, and it was so joyous. And I remember a woman said to me, like, I thought people had forgotten about us, and thank you. And for the rest of my life, I'm gonna pass it forward. And I'm going, man, it's $30 worth of a turkey. Like, this is ridiculous. Like, we're changing people's lives. So it gave me the bug of, like, do things where you can connect with people in need. It's like there's a transaction that happens there in a good way of, like, both people change.
Yeah.
And so last year we fed 8,000 families, and we've fed over 80,000 families in the last 20 years. And then those families, I'm talking about, there's 3 or 4 people in those families. So it's like, there's probably 200,000-300,000 people that have been affected by that. And I do other things beyond that, but you got to give. You have to give, even if you have no money.
Love it. I absolutely love it. Rob, this has been absolutely fantastic. Is there anything else that I didn't ask that I should ask?
No, I mean, it's interesting times. And I think from investors' perspective, everyone's trying to figure out what's going on in the world every day. So I go back to the fundamentals, like what are the fundamentals of a company? What are the fundamentals of people running it? I think this is a great time to be an investor. When the markets get crushed like this, it's just a good time. And then, like I was saying, I would definitely dig deeper into what's going on in crypto and Web3. There's something there you can get get in on it. And that's what I would do.
Love it. Well, Rob, thank you so much for your time today, and hopefully we'll speak to you again soon.
Same here. Thanks, Adam.